This week we got through CPI, PPI, and bank earnings, and so far the market is still holding up above support and we're still in a short-term bull trend. So today we'll look at weekly charts of all of the indices using TrendSpider and looking at our technical indicators. So first up, let's take a look at a weekly chart of SPY. So let's crack open this chart and see what's going on in the stock market today. Alright, so just a quick announcement. I am recording this intraday, so the price action is still moving, but I don't expect there to be any drastic changes by the close. It was either an intraday video or no video, so I figured one video was better than none. Alright, so remember we were looking at a weekly chart and we're using all of our technical indicators today, and we're also going to be pairing that with the weekly chart price action to see where we think SPY is going from here. So the first thing we notice from the price action is we are getting a bull body weekly candle, and we are currently above last week's high, which does show us we are continuing to build on the bullish momentum with the price action breaking out to higher highs. If you look at the weekly candle, it looks bullish engulfing, so that's always a good indication. And we are getting the third week in a row back over the anchored volume weighted average price, which is telling us that positions are now in the profit. And that is exactly what we want to see for a bull trend. We want to see price above this anchored VWAP line, and we want to see all of these moving averages continue to go positively sloping and stacking up in the bullish direction. So looking down here at the weekly RSI is still above 50, so we still have positive bullish momentum. Our MACD is still above 0, and our histogram is still telling us we have positive energy, and we still have this weekly squeeze that has not yet fired, and we also have positive momentum on the Bollinger Band squeeze indicator as well. So with the price action breaking out to higher highs, closing above the anchored VWAP, and getting bullish momentum in SPY, you can see how it's possible that this bull trend still has a lot more upside. Looking at the Bollinger Bands, we still have plenty more room to push to the upside, and when that squeeze does fire, those Bollinger Bands are going to start expanding. Now, if you draw a trend line from the October lows, it does look like we are going to have some very critical resistance we need to break. And right now you can see we do have a wick at the top of the candle as we're approaching that resistance, so there's definitely going to be sellers around that level. Remember, that doesn't guarantee we can't break through it just because it's resistance, but it's definitely a level you want to manage risk from. Looking at our volume shelf, you can see that we're chewing through a lot of that supply, and it's now becoming demand as price action is breaking back over the volume shelf. Those levels are going to be looking for support. So on SPY, there is now going to be critical support between 407 and 411. This increases the probability we can get buyers at these levels and turn this into newfound support that could be the base of foundation of a higher low before we push into the 420s. Remember, once we start closing above SPY 414, that is above the 50% retracement of the bear market, which usually means the bear market is ending, but we don't yet have that confirmation with the close above that level. So once we start closing above SPY 414, it's very likely that we're going to push into the 420s and possibly even as high as 430, but we need that confirmation of the break and close above 414. So right now the price action is looking bullish and looks like we can continue to push higher once we get that close above 414, and all of our technical indicators are still saying we have bullish momentum. That is only confirming what the price action is already telling us. Jumping over to a weekly chart of the NASDAQ 100 triple Qs, we can see a very similar story as SPY. We're getting that third week in a row above the anchored VWAP, and we're also seeing that weekly 20 simple moving average crossing back over the 50 period moving average. So without a doubt, that is a bullish crossover, and if we look at our technical indicators, we have bullish momentum with the RSI well above 50, trading around the 60s. We still have the MACD above 0 with positive momentum, and we're on the second week in a row of our Bollinger Band squeeze firing to the bullish direction, and we still have a lot of positive momentum. So in the triple Qs, that means we're likely going to push all the way back up towards the August highs, which is right around 331. And if you look at the double bottom price target from the daily chart, we're still likely going to push towards 327, or at least close the gap at 322. We're pushing above the volume shelf, so there's nothing on this chart that tells us we have to go lower. It's actually looking very bullish with a lot of bullish momentum, and the price action is starting to hold above some very critical support, which on the triple Qs, that's going to be down here right around 315. So as long as the triple Qs are above 315, it does look like we're going to push into the 320s and then the 330s. Jumping over to the Dow Jones weekly chart, we can see that Dow Jones is trying to push through a lot of supply because we do have this large volume shelf in the high 330s, and that is where the price action is currently trying to break through. Price action is back above the 20 weekly period moving average for the second week in a row, and we are above the VWAP price, so we are starting to see positive energy coming from the price back above the volume weighted average. We have bullish momentum. We have plenty of room in the upper Bollinger Bands. RSI is above 50. The MACD is above 0 and trying to cross back over to the positive direction. And we also do have a weekly squeeze. So with the three big indices looking like they have bullish momentum, getting ready to fire to the positive direction, and plenty of support down below where you have very well-defined risk, there is a very good reason why you should still be long in the market, because you have very little risk to do so and you're going with the direction of the trend. So in the Dow Jones, your critical risk level of support is down here right around 333 to 334. So if you're long on the market, you know exactly where to manage your risk, and the technical indicators do agree that you should still be long on the market. Now jumping over to the Russell 2000 weekly chart, you can see the small caps are in a much different position because of those regional banking failures. There has been a lot of damage in the small caps and they have not been doing well in this high inflation environment. So on the small caps, you can see that price is below a lot of the resistance because we need to break the strong resistance zone at 181, and we still do have weekly RSI below 50. MACD below 0, and while we are squeezing on the weekly chart, we have negative momentum, which increases the probability that could go lower. So it's very important in the small caps that the price gets back over critical resistance at 181 and starts to build up bullish momentum. So if you're still bullish in the Russell 2000, you need to be cautious, and I would prefer you wait until it can break back over 181, and then you can start getting a lot more bullish using that as your risk level. And then quickly, let's take a look at the VIX, and we can see the VIX weekly chart is starting to show signs that we're breaking down towards 52-week lows in the VIX, which tells us fear is still leaving this market. We have a lot of negative energy on the VIX, which tells us it's likely going to stay suppressed. So as long as the VIX is trading below 20, we are still likely going to maintain the bull trend as fear leaves the market. So just to pull this all back together, let's jump back over to SPY. And to summarize, we have three strong indices in SPY, the triple Qs, and the Dow Jones, but we do have weakness in the small caps. Keep in mind the small caps are not needed to keep the rally going, but typically if you're going to see a bull market, you want to see everything rallying together. So we don't have that final confirmation from the small caps joining the rally until we get that break above 181, but there is undeniable objective evidence looking at the weekly chart of SPY and especially the triple Qs that we have a lot of bullish momentum with very well-defined risk levels. So the best way to trade this market is to put the odds in your favor so you have the highest probabilities to succeed and manage your risk at well-defined risk levels. So for that reason, while SPY is above 407, you're going to have a much simpler time if you stay bullish. And if we break below 407, manage your risk accordingly, which means if you're long on the market, you need to start scaling out of longs and get more defensive. That is what it means to manage risk, and that is what it means to manage risk at a risk level. And right now, that risk level is SPY 407. This is a lot of bullish momentum, and we do have valid reasons to believe SPY can push to 430 by the summer. And then once we reach 430, we'll have to seriously look on whether or not this is just a bear market rally before the next leg lower. So hopefully you're learning how important it is to follow what the chart is telling you and to follow price action and trend above everything else, because there's still a lot of bearish sentiment even though the market continues to go higher this year. And you cannot make money unless you trade the chart because the price action is the only thing that's paying you. It does not pay you to be bearish when the chart is bullish. It pays you to be bullish when the chart is bullish because that is the direction the price is moving. Try to hammer home that point that the price is more important than everything, and then learn to trade based on following the price action. So don't forget, I did do a tutorial on exactly how to set up your TrendSpider charts just like I have mine set up here. And you can also get a discount on TrendSpider if you click on my link in the description, as well as save on a coupon code that's there as well. I also have my own Discord where we trade with price action each and every day, and you can find out how to join the Stock Channel Discord by clicking on the link below. I also have a trade alert service that only trades the TQQs and SQQs and sends you all of your buy and sell alerts directly via email and text message. So if you're interested in any of that, the links will be in the description of this video. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.